What's going on, team? So it's been a little while, it feels, since we've done some new content. I've been making some plans in the background lately. I've got a brand new course coming out in 2024, which I'm really, really excited about. Now, I promised you guys I'd always kind of teach my strategy for free, and all of my strategy is on YouTube. But if you want access to the course, you've got to come and join us in Discord. Now, the Discord is free until the 1st of January, so if you're interested, come and have a chat, and I'll see if you're a right fit for the group. It is invite only, so I need to, have a chat with you and see where you are with your trading and make sure you're in the right place in terms of where you are with your trading. If you are brand new, it may be that you need to learn a few more basics. If you're not brand new, then as long as you're kind of active and busy, then, I'm really interested in getting you into the group. Now, the reason why I want to start charging a little bit for the Discord, so this isn't going to be one of these kind of $100 a month groups. This isn't going to be one of these kind of $300, $400, $500 for lifetime access. The reason why I'm going to start charging a little bit, and it's a really minimal cost, is just so that I can make sure the content is the highest quality possible. Make sure that, when I'm hiring video editors and things like that, that we're getting really good quality work. I do this for free. I'm not making any money out of the Discord mentorship. I'm not making any money out of the coaching. So this is ultimately just a little bit of cash coming in so that we can make sure the quality of the content is as high as possible. You guys get a better service, really top quality training mentorship and strategy for next to nothing. And when I say next to nothing, I mean kind of $30, $40 for lifetime access. So today we start a new series. The series is called Chasing Pips. The Chasing Pips series is just a look at kind of trades that I've taken, sometimes maybe trades that I've missed, the reason why I missed them, and ultimately looking into kind of how you can get into these trades going forward. So let's get stuck into it. I'm going to talk you through Friday's price action on dollar Swiss, and yeah, let's get going. I thought this would be a good place to start because let me just get rid of a load of this stuff, just so you can kind of see my mindset here. I'm going to get rid of all of that, actually. Lock it and get rid of it. Okay, so look, this is where we are. Now, we had a bit of a funny week, okay? We had our accumulation day, that was on Tuesday. Normally it's on Monday, but Monday you can see, which is here, Monday you can see was really, really bearish. And then it just continued bearish. Now, this is just a follow-on from the bearish price action from last week, as you can see. Pullback here, accumulation here on Friday, manipulation here, coming into Monday last week, and then obviously the larger push down. So if you wanted to be a kind of a purist, we have got accumulation, manipulation, and then distribution here. Okay, that's absolutely fine. But I like to start my weekly cycle at the start of the week, which is Monday. And sometimes you won't always get that perfect kind of accumulation manipulation from Monday. It normally is. So this is last week's price action. So Monday, accumulation, manipulation, then distribution for the rest of the week. But sometimes it will go through a couple of different cycles, as you can see. So it's worth just bearing that in mind. Ideally, we'd like the accumulation on a Monday, but it can sometimes be on a Tuesday. It can sometimes be on a Friday. Okay, you've got to be kind of subjective, and really, whilst we have a basic kind of Monday accumulation, Tuesday, Wednesday manipulation, and Wednesday onwards distribution, that cycle can vary. Sometimes it can be early, sometimes it can be late. So just bear that in mind. It's pretty simple to see when it's happened. So for example, this is a bearish market. I wasn't sure what was going on here, as you can see. I didn't really trade any of this. But then when I saw this accumulation on kind of Tuesday, Wednesday, and then I saw this big bold move up, for me, it was really clear that this was now the manipulation. And you can see that we took out highs to the left as well. So that's a liquidity point taken. And then this immediate reversal. So I did catch some buys here as well, just in case it was going to reverse. But ultimately, we can clearly see that this is now turning potentially into a bearish marketplace. So the expectation is that once the manipulation has been completed, we're going to then be able to get down to some of these major levels. In terms of where we're headed, we've not got much below here. As you can see, we are in kind of brand new territory. If I go to the weekly chart, the next weekly level is down here. We might have actually tagged that on Friday, but I'm not 100% sure. So we'll have a look at that and we'll go from there. So that's a weekly level there that we'll have a look at. So coming into then, this is our Thursday. Okay, if I just get to the start of Friday, and I'll show you how I start looking at these. So let's get to Friday, wherever it is. Okay, so that's Friday. Drop down to the 15-minute. So for me now, because we've been heavily bearish and we've got a clear distribution here, the other thing that's quite interesting as well, can you see the AMD on the daily time frame from Thursday? There's market on for you. So accumulation, manipulation. Oh, manipulation there. Let's have a look at this. Accumulation, manipulation, and then distribution. If I just pull this back just so you can see it. Okay, really clean chart in there, as you can see. Got down to liquidity levels here. Where do we get to? Look what we got. Yeah, we got down to tag that. See that little spike there? Okay, so that's our Thursday PA. Really clean, as you can see. And when you drop down to, you know, kind of Wednesday, Thursday onwards, these are my favorite days to trade. Drop down to the 5-minute time frame, you can really clearly see that accumulation, manipulation, distribution, and then we tag that level, bang, bang, bang. And, you know, when you're looking for where to take profits, when you are in kind of no man's land like this, okay, so there's nothing immediately to the left, zoom back, go to something like the 2-hour or the 4-hour chart, and just see what you can see. Sometimes you won't be able to see it, which is why sometimes you've got to play around with it. So you can see here, you've got a spike there on a 2-hour candle. That, because it's part of a major move, that's a major swing point, as you can see. That in itself will often be a good place to look for to take profits. You know, especially if you're coming towards the end of the day, you know, it can be really clean. We had New York trap here, so that was a news-based position. Okay, New York trap here. You can see it hasn't been tagged, so that's absolutely fine. It won't be tagged all the time, as you know. But if we just tag that on like that, that could have been an area where you could be looking for an invalidation, you could be looking for the trap to be taken out, but ultimately the higher time frame bias is that this is a bearish marketplace. So for us, what we're looking for is we're looking for, you know, price to ultimately come down and continue bearish. So it wouldn't be an area where I'm immediately looking for a trap from. I'd need to see, you know, a complete reversal. Now, what I would have ideally liked is, you know, this to have been the trap. Some may argue that that is the trap, but I always use the first supply or demand zone that's created. So for me, the trap held. And yeah, like I said, it doesn't always work out. If we go back through previous days, let's have a look. So this trap here was blown. Okay. That trap here held. That's absolutely fine. It will do, as you know, from time to time. This trap here blown. You will find that most of the time the trap will blow, but it's always worth bearing that in mind, that sometimes it might hold. And you know what? That's fine. If I can get 60% of my trap positions in profit, then, you know, I'm laughing at the end of the day. 2-to-1 at 60% win rate, then I'm more than happy with that. Okay, so let's get into this trade. So ultimately, this is our Asia range, okay? And what I'm looking for, is to get into this marketplace with some kind of manipulation. And I had a question from one of my guys on my Discord, be like, well, how do you know this was manipulation? Because Asia ended and there was no manipulation. Now, an ideal scenario, we want that, okay? And then we get our position in, okay? But it doesn't always happen like that. And this is where you kind of got to be on your feet. This is our accumulation, okay? This part here. And this is what sometimes becomes difficult. You sometimes don't know which part of the Power 3 cycle you're in until it's happened. So this, as you can see, was a clear liquidity sweep after the event has happened. Now for me, what I'm looking at is, right, we've got to the point where it's kind of 7-8 o'clock. I'm now coming into the zone where I want to get trading. And for me, I'm thinking, do you know what? It hasn't quite taken out liquidity in an area where... Oh, sorry, at a time that I'd expect, but it has taken out liquidity. And I know that this is a bearish marketplace. I know we've got major levels below, so I'm going to start considering trades. And we had a couple of MSU options here. So this is our first MSU, as you can see here, manipulation of that high. Let's mark that one on. We had a second one here, manipulation of that high, mark that one on. We had a third one here, manipulation of that high, mark that one on. And we had a fourth one here. Okay, manipulation, mark that on. So any one of these were valid entries. You enter on the engulfing with a bit of room for it to breathe, hold down to the low. Let's take that one back so you can see it. So that's a 7R position there. This one, wait for the engulfing, stop above the previous high, hold it down to the low, bring that back so you can see the next one. So that's another 3. This one was quite a good one. So it was a bit wicky, which is exactly why you use the previous high like that. Stop there, hold that one down to the low there. Now, you know, you could have taken all of these. Probably what I would have done is just taken 1 or 2 of them. So again, let's get the engulfing, stop above the previous high there, hold that one down to the low. Okay, not a great one there, to be fair. You might not have taken that one, but look, hey ho, it worked out. So we've got 7 here, 3.5 there, so that's 7.5 and 3.5, so that's 11. Then 4, 14, and then another 1. Okay, so 14, 15 are out of these positions, which is pretty damn good. Now, the expectation is that price is going to continue down. Obviously, we can hold these for a little bit further. I'd want at least 2R out of this. Okay, so let's see what happens. We continue down like this. When we come into our New York Open, okay, so really, really heavily bearish. Okay, we had a bit of news, as you can see. So we had a bit of news there. Okay, we've got this technically is the first supply. But when you've got news coming into the marketplace, it's always worth bearing that in mind, that the news is probably going to leave a trap behind as well. So that first, which was technically the New York Open trap, it was the first kind of sweep that took out any kind of liquidity to the left. So I'll just show you that, what I mean. Okay, so that took out liquidity to the left. So that's our trap. We can mark that on as our trap. But then we had another trap, which was our news related trap. And these are, again, some of my favorites. And what we can do here is we can look for another manipulation setup. So if I just tag this over, so we've got push down, push down, push down. Now, technically, this is a manipulation setup, okay? And I'll tell you why. Because that candle there, that's the wick. Then we had a push high, then we had a push low, and then we had a sweep of it. So technically, that candle there, that is manipulated, okay? It's not as obvious as you can see, but that technically is manipulated. So you could have got into there. That's the engulfing, stop above the high. But you might actually get a better entry. Let's have a quick look. There. There's another one there. So again, low, high, low, high, low, manipulation. So that's our second entry there, and that is obviously a much nicer position. It hasn't got a 17 pip stop, as you can see. That one there, stop above the previous high, and then see if we can hold it down to maybe a previous low to the left. When you're looking for liquidity targets, lows to the left are obviously the most important ones. Those are the ones that are more likely to be shifted than these ones down here. But it's always worth just bearing in mind where price may go. And we're coming into kind of 2 o'clock in the afternoon now. Do we get to that target? I'm not sure. We are Friday afternoon, the week before Christmas, and you know what, we're going to be taking out anyway. So look at these two trades here. That one, we would have got out our 1R, okay, so maybe not the best. You might have chosen a tighter stop on this one, okay, but look, that is the strategy at the end of the day. This one, we got 2.5 out. What's great about this is that this one, if we held down to that liquidity low, we've got 6 on that one now. We've then got 10 on that one now. We've then got 9 on that one now, and then the whopper over here is be 17. So, you know, all in all, a really simple trading day, okay? The reason why we were so heavily bearish is because, well, just look at it. It's a bearish marketplace. And this AMD, although it came early, it was clearly moving bearish. So this then is our manipulation, okay, because it took out liquidity to the left. And then what we have down here, we have our massive distribution. So for us then, that's our distribution. We're really happy with that. It's Friday afternoon, so we can always expect a reversal. What that bounced off, I couldn't tell you if I'm honest. I don't really see it myself. Is there anything in here? Let's have a look. Where's the price? Oh, I can't even get back that far. Let's see what we got on the 2 hour. Where the hell is all our pricing gone? Okay, actually, might be stupid here. Right, so there. What have we got? I mean, we've got a low there and we've got a low there. They're not great levels, but let's see if they were the reason why price bounced off. No. Sometimes there's just liquidity sat in imbalances and things like that. It's not something that I will trade. So look, it just reversed, and this is why ultimately you take your profit out when you can. You know, you've got some great positions here. One of these would have done you for the day, and this news position, yes, it was high risk, but look, it came up, took out that liquidity left, tagged into that supply zone. So let's just draw that on. There we go. So we've got that supply zone there, and we took out resting liquidity here. It's a beautiful little trade there. You could have got in at the top if that was your trade. It's not something that I typically will do. Don't typically like to kind of get in at the tops of these things. You know, they're really, really high risk and really, really volatile. Some people do. I like to wait for my confirmation setup, which is my MSU. And, you know, let's say I've taken the tighter stop here, which I might have done, to be fair, because I definitely wouldn't have traded with a 17 pip stop. But let's say we use that position there, then that's a 3R, that's a 2R. You know, we're laughing at this point. We've got some really nice entries and we're good to go. We've taken out profit at that liquidity level, you know, and we're happy. You know, we take out, this is, you know, some people, they overcomplicate their trading because they're looking to take out massive positions, and that's a great day. But look at these other positions we took early in the week. You know, we've got a little position there, it wasn't that great. Got a little position, I think, in here, which is a little hold down. You know, sometimes, well, all the time, you don't need to take out 5 to 10 R out of your trades. It's more than enough to get out 2R. I'm gonna sneeze. Yeah, gone. To get out 2R from the marketplace, you know, be done with it, because 2R 50% per trade, not 50%, that'd be amazing. 2R at 0.5% per trade is 1%. Do that 5 days a week, that's 5%. You do that 4 weeks a month, that's 20% out. Even if you do half of that, that's 10%. Even if you do it 2 days a week, you're still taking 8% a month, which will pass most prop firm challenges in 6 weeks. So you don't need huge R. Learn to trust the market, trust the setups, know that if you follow the right processes, the results will come, and don't force these massive wins. It's unnecessary. The best trading I've ever done is when I stopped chasing 10R trades and I started just trading 2R trades, and my life has never been better since. So hope you enjoyed this. This is the first in the series. I'm going to try and keep these coming almost every day, trade recaps, and yeah, thanks for checking me out. Speak to you soon.